Right, so we're talking about choosing a stockbroker this afternoon, and it's really important for us to understand that it is a really important subject because any person that's ready to start off in the stock market will obviously need to select a broker that they need to work through. This is something that you cannot avoid. You need to work through a stockbroker. It does not mean necessarily that you are not going to be in charge of your portfolio. You are going to be in charge of your portfolio, but you're going to need to work through a system. And obviously, you're going to need to select a broker. Now, obviously, there are different brokers out there providing you with different services that you can use, and you need to be aware of this. Now, it's really important that we need to understand that you cannot trade without, or you cannot trade or invest, depending on what you want to do, without having a brokerage account. Now, as a beginner or an intermediate investor, selecting your ideal broker is very often a difficult thing, or something that's a little bit harder for someone new in the market to do. But for the more experienced folks, it would be easy to open up a trading account or selecting the right trader for you that fits your preferences. Now, choosing a broker isn't all that different from choosing a stock. It requires a lot of careful consideration, and not all brokers are right for all investors. As I said, you will have different preferences for different brokers, and you need to be aware of this at all times. Now, there are a few things that we need to consider, obviously. Now, the things that we want to consider is the types of stockbrokers that we get. First of all, you get a full service stockbroker, and secondly, you get a discount stockbroker. So those are the two types of stockbrokers that you can get. Now, obviously, you're going to need to choose between one of these two, right? And there's going to be a lot of different brokers out there, but they're either going to be a full service broker or they're going to be a discount broker. Now, let's just talk a little bit about the topic of a full service broker and a discounted broker. Well, first of all, full service brokers offer more services to investors than discount brokers do, but these services don't come cheap. You're going to pay premium for them. Also, much of the work is already done by the broker. They provide the investor with more one-on-one advice, as well as very individualized suggestions and research. Now, normally, for those of you that already have brokerage accounts, you will know about this, because if you work through a full service broker, they will normally email you a copy every day of the market report. They will give you market feedback. They will tell you what happened in the market, shares that they thought that very good performance, shares that did not perform that well. So they will be providing you with a lot of research. Now, obviously, like a full service broker, that's basically what share tracking does. Although we are not brokers, we do provide you with a lot of fundamental and technical information in order to make a decision. Now, on the same hand, a full service broker will also do that, giving you a lot of information that you want to use. So that's why sometimes a full service broker, and because they're a little bit more expensive than a discount broker, people will tend to use discount brokers because they already have a share tracking platform through which they can do fundamental and technical analysis. Now, a discount broker provides the option of solicit, or the better word for solicit, the more English word for understandable, is ask for. So an ask for broker for advice on trades with your existing brokerage account. Now, a caution to remember is that when you do execute the trade, remember, you'll pay a considerably more, usually in execution fees, after consulting an actual broker than you would with a regular online trade. So what that sentence is basically saying is that if you use a discount broker and you do phone up your discount broker and say, listen, I want to know, is this the right share to buy? What is your opinion about the stock? And do you think it would be the right time to buy it now? And you ask him a lot of technical detailed questions, right? And while asking him that, you decide, listen, you're going to execute your trade. That will normally lead to you paying a little bit more in your brokerage's fees than you would normally do when placing a trade without asking any sort of advice. Now, this is why it's so important to make use of online trading services, normally referred to as OSTs, online share trading. So it's online platforms through which you can do your trades without needing to phone a broker, right? And there's a lot of platforms out there today that do provide you with these services that fall within the discounted broker section. And a good example of that would be Standard Bank. Standard Bank is a really good example for a discounted broker, and PSG Online Investment is a good example for a full service stockbroker, depending on the portfolio type that you're going to take with PSG. Now, for beginners or intermediates in the market, discount brokers are probably the best bet. And the reason we say that is because of the fees that are involved. Obviously, I'm going to show you an example at the end, but a full service broker is going to cost you a little bit more than a discount broker. So any person starting in the market that has only about 5,000 to 10,000 Rand or 15,000 Rand, whichever the case may be, it would be wise to start with a cheaper option, because you only need to place your trades. You don't really need that full service broker just yet, because you still have your share tracking platform. Now, there are a few things that we need to think about, but before we get to the fees that we need to think about, we need to understand that some people would recommend a full service broker for new investors, but this is not financially feasible normally, because beginners in the market or even intermediates in the market would not tend to have the sufficient amount of capital to pay for those brokers. And as always, we need to understand that today's online discount brokers are widely used and typically provide a vast variety of tools, and experienced investors only need to use these tools to place their trades. But not only experienced traders, also inexperienced traders only need to use those tools. And the reason we say this is you only need to place your trades. You already have your share tracking platform for which you can use to do fundamental and technical analysis. Now, there are some fees that you need to think about, obviously. It's not going to be free of charge. We live in South Africa. Everything is costing you money. Now, a key thing that you need to remember is, and some of the fees that you need to think about is, first of all, fees to think about is the brokerage costs, which may vary from broker to broker, and they can vary between 0.35% up to an amount of about 1.7% per trade. There's also an additional cost of 0.25% for security transfer taxes, or that's normally referred to as STTs, and you'll see that on your share tracking platform as well. Those are fees that is also payable. Then other fees that's also payable is the straight settlement cost fees. This is something also on the share tracking platform, so you don't have to worry about it. And normally those two fees, the security transfer taxes and the straight settlement costs, are things that are already included in your trade. It's not something that you need to calculate or do anything about. You cannot change it. It's a set value that needs to be paid with every transaction. So you just need to go through with your trade. But obviously your brokerage charges will vary from broker to broker, and that's why it's so important that you do select the right stockbroker, because they will vary in the different things that they will give to you. Now, not only is that something that you need to think about, but as a rule of thumb, the turnaround in dealing cost on the JSE are roughly about 3.5% on a medium-sized transaction. Now, dealing cost on a very large transaction can be considerably lower than this. So for those of you that have a R500,000 Rand or have R1 million that you want to trade, obviously if you're going to invest large amounts like that, your broker will most definitely give you better brokerage fees. That's why it's so important to look at the cost structure when choosing or selecting a broker, because if you invest more money, they'll give you a better brokerage fees. But on normal transactions, it will normally add up to about 3.5%. But we know this. This is something that we constantly talk about when we do some training sessions. When you buy and sell shares, we normally say that the buy will cost you roughly about 2% and 1% for the sell, right? So these are things that you need to bear in mind when doing a trade. Now, also, you need to ask yourself the question, what kind of investor am I? You need to ask yourself that question today. What kind of investor am I? Well, first of all, we already established that there are traders and there are investors, right? We already know that. Now, what are the difference between the two? Well, first of all, let's start with a trader. First of all, traders don't hold on to stocks for a long time. Secondly, they're interested in quick gains based on short-term price volatility, and also they make numerous trades and executions over a very short time span. Now, this time span that we talk about is normally 1 day. Traders will normally buy and sell shares frequently during one trading day. Some traders may only trade shares, but they will buy and sell them quite considerably during a week's period. But traders will tend to buy and sell shares very quickly and try and jump on the train when it's making short amount of gains. Now, same thing that you do want to bear in mind is point number 4, or point number D over there. That's the tax implications. Obviously, the tax implications for a trader is much harsher than the tax implications for an investor. Now, the reason for that is because if you're a trader and SARS declares you as a trader or as a share dealer, if you're declared a share dealer, you're going to pay more taxes, right? And the reason for that is a trader will pay normal income taxes. SARS will see while you are declared a share dealer, they will see that as a second job. So you will be tax liable on the current tax bracket that you find yourself in. And if you're very good at being a trader and you're making a lot of money on that, that will obviously just push up your tax bracket to a new tax bracket if you're not already at the highest tax level. So this is something that you want to consider when getting involved in the markets. Now, the second thing is an investor. So what is an investor? Well, first of all, you get a passive investor. That's what a normal investor is, and that's someone that holds a stock for a long term. They are also interested in letting the value of their positions appreciate over a long period of time and reaping the benefits from that a little bit later on. Now, the reason why we say they want to reap the benefits is because investors will buy the share not just only to make a good profit from the stock, but also receive a dividend from that share. So that's something that an investor would like to do. And we know that dividends are paid out at least twice a year, your interim dividends and your final dividends. Now, obviously, the last point that we made there was taxes once again. Now, the tax implications for an investor is basically you'll be paying normal capital gains taxes, which is about 13.6% at this point in time. So that's your tax implications for an investor. You'll pay normal capital gains taxes. Now, we get this question a lot. So how many trades can I do in a month? Or how many trades can I do in a day? How many trades can I do in a year before I'm declared a share dealer? Now, there's no set standard that is said to be to say, listen, if you do 100 trades during a day or during a week or during a month, you are now declared a share dealer. It's a very gray area, right? So the way it works is, in order to fall in the category of being an investor, you should actually hold on to an investment for a period of longer than 3 years. So 3 years and more. Now, please do not get a shock, and please don't leave the video thinking I'm not going to keep a share for 3 years. You can, if your share hits your stop loss, obviously you're going to sell out of it. You're not going to keep in a share that's not performing. Now, the idea behind the share dealer and a normal investor is that you need to understand that SARS will only declare you to be a share dealer if you buy and sell shares quite a lot in a short period of time. An investor is obviously someone that buys the share with the intention of keeping it for a long period and gaining not only from its profits rallying, but also from the dividends. So traders will normally not worry about dividends. They will trade the share this morning, they'll buy it, and by this afternoon they'll sell it, right? They don't worry about dividends, and that's something that SARS do bear in mind. But every person's case will be different from one another. So they will look at it from case to case on what they will be charging you of whether or not you're a share dealer of an investor. Obviously, being an investor is what we're looking for. Most of us are already working or still working, right, and not yet on pension. So obviously you're going to keep the shares for a long while. You can't sit and look at your shares every minute of the day. You're going to buy them to keep them. Because at the end of the trading day, when you get home, when you get into bed, you open up your laptop, you just quickly want to look at what's happening on your portfolio. So you're not going to be buying and selling them the whole time. That's obviously not what we're aiming for. We're aiming to be investors, not traders. Now, there are a few factors that you need to consider. The first factor that you need to consider is obviously customer service. Now, the factors that I'm talking about that you need to take into consideration is the factors of the brokerage firm that you want to work through. So how are their customer service? If they don't have very good customer service, don't use them. Why would you go to a shop that offers you very bad customer service? That's not going to work. And you have your funds in their banks. So you want to know that if you're working through a company, how is their customer service? Is it friendly? Is it quick? And are they helpful? That's the important thing. Are they helpful? The second thing that you need to consider is discount is not always a good deal. A lot of people think, listen, I get a very good discount from broker A, that's why I'm not going to broker B. But what you're forgetting is the fact that the brokerage that you're paying is obviously allocated to a certain amount of services that you're receiving from that particular brokerage firm. So if you're working through a brokerage firm that doesn't cost you a lot, it basically means that that is just a discount broker offering you basic services. And basic services are just normally which enables you to look at a quick chart, not anything fancy, but the main aim of that platform would for you to be to buy and sell, right? But a more expensive platform like PSG, for instance, will offer you with a vast amount of data to make a good idea of whether you should buy or sell a share. Now, the next thing that you need to look at is what we refer to as availability. What is the availability of the services that you're using? Now, these days, everything is on the internet, everything is on the web. So how quickly does the website open? How quickly can you get into their services? How quickly does their platform respond when you place a buying transaction or a selling transaction? These things should be quickly. Because we're working on the markets, every second counts. That's why it's important to go and test the company's website through which you are working. The fourth thing that you need to think about is alternative investment options. Does the brokerage firm through which you work offer you different types of investment options? Things like tax-free savings accounts. Do they offer you a selection of warrants and options and futures? This is not something that any beginner or intermediate investor is going to find themselves working with. But for the experienced investor, they're probably going to be looking at warrants and options and futures. So does that platform give you the functionality of working with those things? The fifth thing that you want to look at is the stockbroker's reputation. Now, a reputation is very important. You need to work through a company that's very reputable, that you know that if you work with them, that people do not have hassles with them. Now, every company has problems. I know that. Nobody's perfect, and I'm not expecting anyone to be perfect, but obviously I'm not going to invest or work through a brokerage firm that tends to steal people's money. So watch out for fly-by-night stockbroker firms. Rather work with the people that is well known in the market or in the industry. Also, price isn't everything. Once again, make sure that what you're paying for is what you're going to get. The seventh thing that's really important is the minimum deposit required. Some brokerage firms require that you do have a minimum amount in your brokerage portfolio before you can actually open an account with them. So for instance, company A might say, listen, we don't have any minimum deposit, or let's say the minimum deposit is 100 Rand. But your full brokerage firms, right, not your discount brokerage firms, your normal brokerage firms, your full service brokers, they will normally say, listen, you need to have a minimum amount of 5,000 or 3,000 in your account before you can work through them. So do bear that in mind as well. And then also remember, you can earn interest on your money in your trading account. That's something that you want to bear in mind. Brokerage firms need to provide you with interest. Well, it's not a need, but a lot of them do provide you with interest on your money within that account. And that's something that you want to bear in mind, because if you're not ready to place a trade, you want to know that if your funds is in that account, while it's sitting there waiting for you to place your first trade, will my money earn any sort of interest? And that's really important to look at. And obviously the last thing is, what are the extras that the company is providing to you? It's always obviously to have nice little extra things which doesn't really cost me much more, but do bear in mind that all of these companies have a lot of extra features and you want to know about them. Now let's look at an example. Now I did do an example for you here, and you can clearly see I've used PSG, which is a full service broker, and Standard Bank, which is a discount broker. Now you'll see the difference between them. Obviously on option 1, you'll see that PSD charges you for data on monthly cost. If you only use delayed data, they charge you 40 Rand. But obviously their options get more expensive as you move on. Their live data costs you about 139 Rand, and also if you get a little bit more technical for the more advanced user, it will cost you about 209 Rand per month just in administrative costs. Now Standard Bank actually has a set monthly fee. The set monthly fee is about 90 Rand that they charge you, and they provide you with live data as well. On your 90 Rand per month, you also receive live data. You'll see that's on your system. So live data is already included on Standard Bank's site for 90 Rand, whereas in order to get live data from PSG, you're going to need to spend more than 139 Rand in order to get those data. Now, if you go and look, where the proof is in the pudding is not in the administrative fees that you're paying monthly to the brokerage firm. The proof is in the pudding where it comes to the broker fees that you're paying per trade. Okay? Now, look at PSG. PSG is charging you a minimum fee of 99 Rand a month, 99 Rand per trade, sorry, while the minimum fee at Standard Bank is 90 Rand, and it's set on a fixed brokerage rate of about 0.5%. Now, you'll see that PSG doesn't have a headline brokerage rate. Because PSG is a full service broker, they provide you with different investment options, right? Now, Standard Bank does not provide you with that. Standard Bank has a fixed brokerage rate of 0.5% for every Rand that is invested. Now, on PSG, depending on the amount of money you have and the amount of money that you invest, you'll get different brokerage fees, right? So you'll see that PSG charges you for anything between 0 to 25,000 Rand, it's going to cost you 0.9% brokerage. That's 0.4% more than Standard Bank charges you. Then you've got 25 to 100K, which is 0.85%, and obviously it goes down the more money you have or invest through PSG. And this is the thing between PSG and Standard Bank. PSG is a full service broker providing you with a lot of more in-depth detail and much more advice, where Standard Bank is just a platform that you can use to work through. Now, most people will use Standard Bank because they do not need the advice or the features that PSG provide them, because they have other platforms, for example, like the share tracking platform, which they can use to do technical and fundamental analysis of their shares. And this is why it's so important to take into consideration the different costs involved that you're paying per trade through every broker. Now, I hope you found this presentation insightful, that you've got a little bit of an idea. Remember to save a copy of the presentation on your system. If you don't know how to get hold of it, I'm going to give you the contact numbers just now. I had a question that did come through about tomorrow afternoon's webinar. I just want to touch on that for those of you that did register for tomorrow's webinar. Remember that the webinar starts at starts at 12 o'clock and not 1 o'clock. We do apologize for that. That is a type mistake. The webinar starts at 12. For those of you wondering when it's starting, it is starting at exactly 12 o'clock. So please just be aware of that, that tomorrow's market analysis or market overview is starting at exactly 12 o'clock. Be aware of that time difference and the type mistake that was made on the registration when it was sent out. It's starting at exactly 12 o'clock. Right, you can contact us if you have any questions or require more assistance. You can phone us on 012-940-0800. Just that number again, 012-940-0800. Alternatively, you can contact the support after hours numbers as well. We do have a cell phone number for you. You can contact us on 082-781-9885. Just that number again, 082-781-9885. From my side, Corné, thank you very much for joining us for this afternoon session. Until tomorrow's market analysis, remember to register for that webinar starting at 12 o'clock tomorrow. Enjoy the rest of your day. Bye-bye.